2018, let's get it, folks. Massive dollar weakness just came in last week and a massive amount of euro strength. Let's break down these markets. Traders, what's going on, guys? Cleveland here. Hope you guys are having an amazing week. It is 2018 and these markets are absolutely ripping. Hope you guys also had an amazing holiday. Ended up catching the flu for a solid week and a half, almost 2 weeks. That really, maybe kind of slow down in the new year, but feeling 10 times better and ready to crank out on these Sunday market breakdowns and attack these markets head on, right? So we have been talking in the community and we have been assessing these markets and breaking down these markets with some ideas in terms of, how the different geopolitical events and the different monetary policies that are going to be affecting us in 2018. Everyone's going to be doing that for the next few months, right? How those are going to affect our markets, right? So let's get into that. Folks, if you're not liked and subscribed, make sure you do so right now. We have some awesome new content segments coming out tomorrow. High Impact's back, and a few extra things as well that we're going to be launching sometime later this week. So make sure you guys stick around, all right? So first things first, the precipice of where we thought this US dollar could go right before the new year started was sell side, right? We knew the dollar got hammered really hard, and we did think that there could be a slight short-term pullback on the dollar index. Check out the dollar index, and we never really got it. Remember, last quarter, almost every week, and definitely most of the our precipice or our general idea as to what we're going to see, October, November, September, we thought that the dollar would rebound a bit. Okay, markets were under a 23.6 retracement, and we thought that we could pull back up into the 38.2 at least before we got a pullback. We just thought markets were a little bit overextended. That wasn't the case, folks. We just hit an all-time low on the dollar index. Okay, so that is massive. Now here, I'm going to run the tape on a today's market video that we put out in the community last week. We had an idea that, hey, if dollar weakness is going to prelude this week, which it really looks like it is, the different things that have come out in the past few months have been alluding to Trump wanting what? More U.S. strength. Right, the euro wanting what? Less of a quantitative easing ideal happening, right? They want to speed that process, okay? And those results came out last week in terms of the euro rationalizing that quantitative easing was something that they're going to attack much sooner than expected, and that's what got us that breakout on this Euro USD at $1.22. So check out the tape here on the trade idea for the GBP USD. We thought that if anything could pop structurally, the GBP USD was best suited for US weakness, and we thought that we would get a breakout of that high. Again, this shit's happening way sooner than expected. These moves are happening extremely quickly. Check out this GBP USD buy idea that we had in the community last week. Why has this not recovered yet? Is that US dollar that strong? No, of course not. So I definitely think there's still more upside. We're at 3,500. Let's see if this thing gets to $1.40. $1.40. All right. Okay, so in that video, I also mentioned that, hey, I think if the euro does get a breakout, it can happen. But I think if we were to get a breakout in this GBP USD, man, it would be 10 times larger. But it turns out the momentum on this Euro USD was massive. Okay, it was massive. It was not anticipating a break from 20 flat, really, all the way up into $1.22. Okay, that's a massive, massive run. So right now, what do you think? Okay, I mean, if you're really forecasting, which is what the general investment public is forecasting, euro at $1.35, all right, by the end of this year, how is that going to happen? Is that going to happen in some kind of, pullback like fashion where we can maybe potentially see a 38%, maybe a 50% pullback, push back up into structure, maybe into the $1.25s? Pull back, right? I mean, or is this market going to run like it did last year? Check out the Euro USD, when it started really catching its footing in April, May, August. I mean, this thing went absolutely parabolic and you caught no pullbacks. So we're going to have to really assess these markets hard as to make sure that if we're going to account on pullbacks, well, then we need to rationalize that the market's going to actually pull back, right? Or if we're going to rationalize breakouts, well, then we need to assess that, hey, markets are going to hold these highs, break out higher, and then boom, we need to have a breakout style methodology, okay? So that's something that we're going to be taking into account day by day, assessing how this market condition is going to have its, how this market condition is going to position us on a methodology perspective, okay? So that's massive, folks. Keep an eye on that. That's what I'm keeping an eye on for this Euro U. I also see Euro U at $1.30 by the end of this year, at $1.35. Who knows what can happen with the things happening in this administration. they want America first, and we have to have a weaker dollar if that is to happen. All right, so if we need that weaker dollar, then we will see this Euro U immensely higher than we could expect. And that's the same thing with the NZDU. That's the same thing with the Aussie U. That's the same thing with the GBP. All the USD crosses, we should see a bullish momentum. Obviously, US CAD will see some sell side. We have to keep account of that, all right? When it comes to the euro in general, remember, folks, right now the European Union, the European Central Bank, they want to stop quantitative easing, right? And so there's this slow, methodical process of slowing quantitative easing. Remember, they were doing $60 billion in asset purchases month after month. They want to slow that down to 50, 40, 30, so on and so forth, to where they're no more printing any cash. All right. So again, if that is something that is happening, if that is something that we can see on the economic front, that might get this Euro U even higher, okay? But that means we also have to take into account Euro AUD, Euro JPY. Remember, we're on the search for volatility, and we're also on the search for the correct positioning, all right? Because again, if we see that there's a higher probability of us being able to assess that, hey, the Euro AUD is going to move a lot better than Euro JPY. JPY has been gaining a little bit of strength recently. Then we probably want to play the Euro strength over on the Euro AUD, okay? So again, just assessing all markets and all majors and minor currency pairs will give us the better advantage. All right, so guys, what I want to do is I want to start breaking down these markets and pull over to the technical aspects. That way we can frame exactly where we are for the new year, all right? We can see exactly where we are, third week of January, second week of January, and we can then assess forward. And that way, again, if you're consistent with your assessment of markets, you can really get into the ebb and flow and rationalize exactly what we're going to see and how these markets are going to be positioning, giving you the advantage of hopefully implementing the correct methodology, okay? So guys, make sure you're subscribed, excited to crank out on all of these breakdowns more than ever, and obviously like the video for your boy, okay? Let's move over to the charts. All right, guys, let's pull over to these charts. First things first is Euro USD. Here's the monthly perspective, all right? So just to help you guys rationalize what last year looked like, all right? So here, check this out. If you guys don't know, this pulled back down into these levels here, which brought us all the way down to the $0.02s. That was because the United States stopped quantitative easing, stopped printing money back in 2014, all right? That is what first brought us down to this consolidated low, okay? We sat inside of this range where we existed no higher than a 23.6% retracement, okay? Our bread and butter. So we ranged around in that area up until, boom, we started having all this optimism come into the U.S. economy in regards to how Trump was going to run his, I guess, administration and his business. And for that to transpire, for that to work out, you have to have a weaker U.S. dollar. What's interesting to see is that when Trump was elected, you can actually see a down move here on the Euro U, kind of preluding to more U.S. dollar strength. But remember, U.S. dollar strength is counterintuitive to U.S. first. All right, if the U.S. dollar is strong, then the U.S. economies, the U.S. companies here are going to have a hard time exporting their goods out into the neighboring economies. We are going to be trading at a premium. The U.S. dollar will be trading at a premium, which means all the products for conversely to the other economy's currency are going to cost more money. They will be paying more for our shit. All right, so that's just like in Australia. Let's say Australia can do business here in the United States or in Canada with a specific product. If we see that the U.S. dollar has increased in value, they will be paying more for that. Okay, so what will they do? They would probably head over to the U.S. CAD. Now, the U.S. CAD has also gained in value, so maybe that's not the best, I guess example. But let's say the Mexican peso, the Aussie dollar, whatever. You guys just rationalize that if the currency increases in value, that's pretty good for imports. That is bad for exports. All right, so that is what originally pushed us outside of the structure. Once we started to rationalize that, and the investment public started to rationalize that the U.S. dollar had to be weaker, you saw a momentous move back up into structure. Once we then also saw that the Trump administration was going to be very, very late and unorganized in terms of what things they were going to get done, then guess what, folks? That gave us our extra push back up into that level. In January 2017, me and the team, we theorized that Trump wasn't going to get shit done, okay? And we thought as if, hey, since Trump is going to get shit done, this price move that we saw of this U.S. dollar strength should erode. Okay, so remember, Trump got elected in November, right? So here's our November price move, all right here, folks. All right, and so this entire down move plus lumped in with an interest rate hike. We also had the Italian referendum that happened around this time, which actually was a little bit counterintuitive to the European Union. That brought us a lot of sell side, hundreds and hundreds and hundreds of pips, folks. I'm talking we were as high as 1090, yeah, the 11 flats, the $1.11 flats, pushed all the way down to the 04s, consolidated there at that low. We came into January saying, man, we have just moved over 400, 500, close to 600 pips sell side. Guys, look, they're pricing in very quickly a U.S. strength play. I don't think Trump's going to get shit done. And so that's when we saw markets starting to erode. And we did have a price target back up into the consolidated high, which is that 23% level here, $1.14. But as we can see, markets excelled outside of that price level dramatically. No pullbacks, folks. Look at this. Month after month after month after month, you never saw a pullback up until 2 months here. And we did play this pullback very well here within this two-month time span. This pullback here, these two down moves here coincide very well. If I pull over here with the dollar index, they coincide very well with the low on the dollar index. Okay? And so that low here, so there you go. So these 2 months here on the buy side for the dollar index were those two sell side months over on the Euro U, September and October. We thought that we would catch a footing here at this price level, giving us some kind of stability, bringing us back up into structure. That is what we wanted to see. We wanted to see a 38.2% retracement, which would mean that obviously U.S. dollars getting stronger. We wanted this dollar index at 95, 90, 96, basically the 96 flats. We never got it, folks. We never got it. And if we pull back over here to this Euro USD, what you guys will see is those same 2 months here. Okay, September, October, sell side, caught, didn't catch any of the downside, didn't ever come back down into this previous structure, which is where we wanted markets to, which is where our targets were, $1.14. Folks, markets stabilized, and we just had another massive rally out, month after month after month, buy side move. So, folks, you have to acclimate to this market condition. If we get anything like this in 2018, guys, you're going to be having to trade breakouts, okay? You're going to be having to trade breakouts. There was barely any pullbacks. Look at the side of these pullbacks here, okay? So you have an up move, no pullback. Up move, no pullback. No retest back down onto structure. That's the usual methodology that the technical analysis guys play. Well, guys, fuck technical analysis. When sentiment is demanding and pushing this market around, your technicals will not work. So you are getting overbought scenarios time and time again on your RSIs and with your patterns and all that shit. If you align yourself fundamentally, you'll rationalize that, hey, this market can absolutely run based off of what's happening behind the scenes in these economies. We might need to have a breakout style methodology, and that is what we are implementing up until we saw certain things happen here. Now, the thing that gave this market a pullback here on this Euro U was we had a CPI came out. That was great. We saw inflation come back in to the States. We had an uptick in inflation. We had an average hourly earnings increase by 0.5%. Okay, average hourly earning, when that increases, what does that mean? Consumers can spend more money. Okay, which gives what? More monetary volatility, which gives more what? An incentive for the central bank to raise rates. All right, so that's why we saw markets pull back down in the structure. Didn't sustain, folks. We had this market push right back up into this level. CPI had a leg down. We actually didn't take higher on the CPI. Average hourly earnings stayed flat. And then generally speaking, we also had a release around this time, the Jackson Hole Symposium, where Mario Draghi mentioned, hey, quantitative easing, we're going to slow it down from 60 billion month by month to, folks, we're going to slow it down to 50 to 40 to 30, and subsequently after that, no more QE, bringing us up into this high that we are in right now, because last week, Draghi, this is what I'm going to talk about tomorrow on High Impact, so I'm not going to give away too much, but Draghi last week mentioned that, hey, QE may happen a little bit sooner than expected. That gave us a 200 pip price move, folks. Guys, this price move that we just saw in this Euro U is the largest single price move over the past 2-day span that we saw in almost all of 2017, all right? So you got to acclimate to these markets. Who knows if this market's going to pull back down into the 2060s, all right? I'm assessing that it will. I'm hoping that it will, but now that we just broke the high, we have to understand that, hey, we need this thing to turn around. Are we too late, or will we have to adopt a different methodology to put some capital on this move and size into this position the best way, with obviously limiting the downside? If markets are going to be extremely momentous, then we need to start looking for entries now. No pullbacks down to the 18. None of that shit's going to happen. We might just stabilize here at these $20s, going no lower than $20, giving us the ability, if we do pull back to $20, giving us the ability to put some size in this bad boy and start having this market trade higher, okay? So we have to take that into account. That's the breakdown on the Euro U with all of the fundamental data, the major implications that have taken us to where we are. That is the data right now in the Euro U. You guys have to assess fundamentally why these markets are moving, guys. Look, technicals have no implications here, had no implications here, so on and so forth. fundamentals are giving us our best deriving our best edge as to where these markets can run to. So same thing here on the Aussie dollar. If we check out the Aussie dollar, no surprise, I want to see this market break back up into structure here. Okay, so obviously there is counterparty risk. We have to assess what's happening in Australia. So what's happening right now in Australia? Again, talking about that tomorrow on the fundamental front, but things are looking pretty good in terms of, hey, they don't have a dramatic quantitative easing program running at the moment. It was just actually really hot in Sydney. I don't know if you guys know, but they broke like a record. It got 115 degrees. Hasn't done that since like the 1930s, but that's near here nor there. I do forecast that we will also see a move here. I'm just forecasting dollar weakness across the board, folks, but we just want to make sure that we're sized correctly. Now, if we come over here to the GBP USD, same thing on the GBP USD, except the GBP USD is a little bit more interesting because of the fact that Brexit. We're back inside of that Brexit candle. We were sitting right underneath it, right around the close of Brexit. Well, we were back inside of that Brexit candle, which means that we may be able to erase in 2018 all of the Brexit losses. And that is massive. That means that we will have a price move up into the $1.40, which is what we mentioned last week, a few days into last week. I think it was Thursday or Wednesday, Tuesday or Wednesday. But we could also see this thing run back all the way up into the $1.45s. Okay, having a full 100% retracement of where Brexit currently is, and that is what we're forecasting. I was talking with Patrick, one of our senior traders in the community months and months ago, and we were like, man, what is this thing going to do at $1.30? What is this thing going to do at $1.30? It's just amazing to see that now. We popped outside of that $1.30 all the way up into $1.37, and he did forecast that we would probably see this market back up into structure. As we have been saying for the past 6, 7, 8, 9 months, GBP undervalued, Brexit risk still weighed in. If Brexit negotiations end up coming to the buy side or basically looking positive, we will see this market push back up into structure, erasing those gains. All right, so now where is the best place to play that, right? You want to play that over here on the GBP USD. If you're assessing that you may get some GBP strength, you want to play that over here on the GBP AUD. All right, I kind of like the GBP AUD in this fact that we've had this very large pullback recently. That means that we will trade easily back up into this structure. So I actually like this GBP AUD. I also like the Euro AUD, because this Euro AUD looks really nice in terms of, again, massive pullback. You had some Aussie strength come in, but remember, positioning right now, the Euro's looking good positioning-wise to gain some strength, and the pound is looking good positioning-wise to gain some strength. I think we may see that happen here on this Euro AUD. This is a monthly time frame. As you guys can see here, look at this. We have had a hard time breaking above $1.54. Okay, look, a break outside of $1.54 will absolutely lead us back up into 156, giving us a very good looking price move there. But still sticking back on that GBP to check out the GBP JPY. This was another trade that we were looking to see. Hey, look, Brexit risk still priced in fairly dramatically, right? So again, if we want to erase some of these Brexit gains, we can see the GBP JPY push back up into the 160s. Right now we're sitting at the 152s. All right, so let's keep moving forward here. NZD USD, obviously NZD is going to correlate pretty well with that Aussie dollar. Right now sitting at 72.30, made a high at one point at 75 cents. If we pull over into the weekly here, look at that, man. Just in the end of December, or the December period, was a massive week for for Forex in general in terms of this U.S. weakness play. Just week after week, we just saw a lot of capital escape outside of that U.S. dollar. A lot because, again, not mainly just because the U.S. weakness and people preluding to, hey, this U.S. economy needs to get stronger, so let's start shorting this currency. But people were just doing asset allocation. They were pushing money over to the euro because the euro has so much upside. Okay, people are wanting that carry trade, all right, these larger institutions. Okay, so that is something that we just saw across the board. This U.S. dollar didn't just get destroyed because of just the the U.S. dollar needing to get weaker. Also, people wanted to move their capital, folks, and that's why we see this massive price move. Wanted to take a look at this USD JPY as well. We were talking about the USD JPY in terms of the interesting patternized move that we see happening. As you guys see, I still have some stuff drawn up here. Just you see a massive up and down motion here in terms of just how price is currently functioning. And obviously, again, if we can get that back to the upside, we were hoping to see markets potentially stabilize here at 111. Okay, now obviously, again, that is counterintuitive to our U.S. That will be counterintuitive to our U.S. weakness play, because if the USD JPY goes up, obviously that means that we are getting a U.S. dollar surge in price, all right, or JPY weakness. So if we get any kind of JPY weakness, or we get the U.S. dollar kind of pulling back a bit, you're going to be able to catch those U.S. dollar pullbacks in terms of U.S. gaining strength all over the place. But one of the best places here, I assume, is this USD/JPY. Because, yeah, you could play US strength over on the Euro USD, but the Euro USD is at a high. So you really don't have a place to say, hey, look, if I'm wrong, I'm going to get out here. I don't like playing pullbacks when markets have formed the all-time high and I have no structure years back. You know, I don't have any structure at all to even be able to calculate where we should put our targets, all right? Otherwise, you have this USD/JPY here. You can say, hey, if markets escape out of out of 110, we could probably calculate that, hey, this thing might continue moving sell side, so we can liquidate the position, all right? So I like the fact that we have a floor. We also have somewhat of a ceiling. We can see markets go back up into 112. That is something I'm looking at here for the USD/JPY, all right? So generally speaking, folks, again, this year, we're going to have a little bit of a different methodology as to how we break down these charts. Obviously, we're going to keep a look at on the Euro, Aussie, and on the Pound, you know, JPY and all these other ones. But we're going to keep an eye out on really everything because, again, you know, we shouldn't be stuck or held to just one or two pairs. In the beginning as a trader, of course, you want to kind of focus in and understand how markets work on one particular asset and one particular exchange rate just to kind of get the feeling of it. But remember, you do want to scale to being able to assess markets on a scale that is outside of just, you know, hey, I only look at these 3 pairs. I only look at these 5 pairs. Because, again, if we know that opportunity is on the Euro AUD in the sense that, hey, Aussie weakness is coming in, Euro strength is coming in, that divergence there is going to really give us an amazing price move. Folks, I'm going to play that over there on the Euro AUD. If you get your Euro, if you get a, let's say the US dollar wasn't doing shit and it was just flatlining and you're getting strength over on the Aussie dollar, well then, yeah, you can, you know, start selling the Aussie dollar. Let's pull it up here so I'm not just talking to you guys. Yeah, you can start not selling, but buying the Aussie dollar, right? If the Aussie dollar is getting strength and the US dollar is flatlining. But wouldn't you want to be in a pair where you have 2 price moves happening, where you have Euro maybe having some weakness come in and the Aussie dollar gaining strength? All right, that is where you, Euro AD, that is where you want to be. That is where you want to actually, you know, put your capital in, just because of the fact that you have 2 extremes happening, okay? So, again, that gives us an ideology behind how to pick a certain pair that we're looking at, and that ideology proves to be really profitable for us here over at Top Traders, MotiveFX, and trust me, I think it'll do well for yourself, okay? So, guys, let me know if you have any questions. Give me a breakdown as to what you're looking for in the comment sections in terms of charts and assessing these markets. High Impact coming out tomorrow, subsequently with more cool new content here in 2018. Guys, I'm excited to be cranking out on these videos with you folks. Let's do this, folks. Let's have an awesome year, 2018. I'll talk to you guys real soon. Your profit, always my motive. Peace.